Every crypto investor will face a bear market eventually. It's not a question of if, it's a question of when. And here's the truth that nobody wants to admit. Most people handle it badly. They panic sell at the worst moment, make decisions based on fear, and end up regretting it for years. But it doesn't have to be that way for you. By the end of this video, you'll have 3 concrete strategies that actually work during a crypto bear market. And the last one, it's the thing that separates the people who come out ahead from the ones who just barely survive. So stick around. This is going to matter. Let's start with what might be the strangest piece of advice you'll hear. Stop checking your portfolio so often. I know that sounds backwards. Your money is on the line. Shouldn't you watch it closely? Actually, no. Checking constantly is one of the worst things you can do for your mental state during a bear market. Here's what happened back in 2022. Bitcoin hit its all-time high of around $68,000 in November of 2021. By November of 2022, it had crashed all the way down to roughly $16,000. That is a 76% drop in 12 months. Let that number sit for a second. If you had $100,000 invested at the peak, you were down to around $24,000 at the bottom. Now, if you were checking your phone every single day, watching every tweet about Bitcoin crashing, every headline about crypto companies going under, what do you think you would have done? Most people sold. They couldn't take it anymore. The pain of watching their savings disappear was unbearable. So they locked in their losses and walked away. And that is exactly the wrong move. Not because selling is always bad, but because panic selling almost always is. Here's what I want you to do instead. Set a schedule. Once a week, check your portfolio on a Saturday morning when you're relaxed. That's it. The rest of the week, you live your life. This simple change removes the emotional trigger that makes people sell at the worst possible time. It's not exciting. It doesn't feel proactive, but it works. Now, here's where it gets more interesting. Once you've got your emotional guardrails in place, there's a legal strategy that most retail investors completely overlook. It involves the IRS, and it can actually turn your bear market losses into a long-term advantage. I'm talking about tax loss harvesting. Here's how it works. When your crypto is down, you can sell it to realize a loss for tax purposes. The IRS lets you use those losses to offset capital gains from other investments. And here's the beautiful part. If your losses exceed your gains, you can deduct up to $3,000 per year against your ordinary income. The rest carries forward indefinitely. You don't lose it. It just follows you into future tax years. But there's a catch. You have to wait at least 61 days before buying back the same asset. This is called the wash sale rule. The rule exists to prevent people from claiming artificial losses while keeping the same investment. But here's the thing. There are other coins in the same category. You can sell your Ethereum, buy a similar Layer 1 alternative, and then switch back after 61 days. This is completely legal, and smart investors do it all the time. Real example. Let's say you bought Ethereum at $3,500 per coin back in late 2021. By late 2022, it dropped to around $1,200. You sell everything, harvest your loss, and use that deduction on your taxes. Then, 61 days later, you buy back in at $1,200. Now your cost basis isn't $3,500 anymore. It's $1,200. When the market recovers and Ethereum climbs back up, you're already in a stronger position than someone who just held through the crash. That is the power of tax loss harvesting during a bear market. You're not just surviving. You're strategically repositioning yourself. If this is making sense so far, hit that subscribe button. I drop videos like this every week, and the best stuff is still coming. Now for the one I've been saving. Here's what most people never figure out during a bear market. While everyone else is doom scrolling and checking prices, the real opportunity is hiding in plain sight. It's education. Specifically, using the bear market to actually learn how crypto works. Think about it. During a bull market, everyone is a genius. Friends are giving you hot tips at dinner. Your barista mentions a new DeFi protocol that's guaranteed to go up. Everyone has opinions, but nobody really understands what they're invested in. That's fine when prices are climbing. But when the market crashes, that lack of knowledge becomes a liability. During the 2022 and 2023 bear market, here's what happened to the people who used that time wisely. They learned about staking rewards and what it actually means to earn yield on your holdings. They studied Layer 2 scaling solutions and understood why transaction costs were dropping. They dove into governance tokens and learned how to vote on protocol changes. They turned the bear market into a crash course in everything crypto. And here's why that matters so much. When Bitcoin hit $16,000 in late 2022, most people were terrified. But the people who understood Bitcoin's fundamentals, who had studied the halving cycles, who knew that miners were being squeezed but the network was still running smoothly, those people saw an opportunity. They bought with conviction, not because they were gambling. because they understood what they were holding. By November of 2024, Bitcoin had surpassed $100,000. The people who panicked sold in 2022 missed the biggest rally in crypto history. But the people who used that bear market to learn, to understand, to build conviction, they were ready when the moment came. That is the secret that nobody talks about. The bear market isn't just a test of your nerve. It's a gift of time. Use it to become the investor who actually knows what they're doing. So here's the recap. Point 1, check your portfolio less, not more. Point 2, harvest your losses strategically using the tax code. Point 3, use the downtime to actually learn how this space works. That third one is the thing that changes everything. Every major bear market in crypto history has been followed by a massive bull run. Bitcoin crashed more than 80% in 2014 and then eventually went past 60,000. It crashed again in 2018 and then surpassed that level within 3 years. The pattern repeats. And the people who survive and actually thrive are the ones who don't panic, don't waste their tax benefits, and use the quiet time to get smarter. If you got value from this, share it with someone who's currently stressing about their portfolio and subscribe. I've got something even better coming next week. Catch you then.